Up, the trader's biggest enemy. You might be wondering, what's this checklist really for? Well, think of it as a defense mechanism against the single biggest threat to your trading account, and that threat is your own mind.
See, your brain is hardwired with all these little mental shortcuts or biases. In daily life, they're pretty useful. But in trading, oh man, they are absolutely devastating. FOMO, fear of missing out, is what makes you chase a pump that's already happened. Loss aversion is what makes you hold a losing trade just hoping it'll come back. And overconfidence after a couple of wins, that can make you take risks that are just way too big. These are the invisible enemies that a checklist is designed to defeat.
The whole goal here is to shift your entire mindset. We're moving away from that old way of thinking, being reactive, trying to catch every little up and down, and into a new mindset where you are mechanical. You're precise. You stop trading on a gut feeling, and you start trading based on a system that you know has a positive expectancy. You learn to trade in the big, clear moves and just ignore all the other market noise.
And this right here, this is the light bulb moment for every single developing trader. You realize that being profitable isn't about hitting more home runs, it's about minimizing the strikeouts. Your number one job is not to make money, it's to protect the capital you already have.
Okay, so that brings us to our framework for discipline. How do we actually build that defense against our own brains? We create a tangible system that forces us to be objective.
And here it is, the 7-point checklist. Every single one of these questions has to be answered with a solid yes before you even think about clicking that buy or sell button. Think of this as your gatekeeper. Now let's break it down. All right, first part, reading the market story. The first items on our list are all about context. Before you can even consider a trade, you have to understand what the market is actually telling you. So the first and probably the most fundamental question you have to ask is this: what is the primary direction of the market? Is it making higher highs and higher lows, or the other way around? Is it super clear, or is it just a choppy, sideways mess? So why is this so crucial? Because fighting the trend is one of the fastest ways to drain your account. You want the market's momentum behind you, acting like a tailwind for your trade, not a headwind you're constantly fighting against. Okay, so once you've got the trend, you need a specific, predefined reason to get in. You can't just buy because the market's going up. You need your pattern, your setup. So, a valid setup is simply a pattern that you have studied, that you've backtested, and that you know has a statistical edge over time. It could be a pullback to a key level or a breakout on high volume. It just has to meet your criteria. And the rule is simple and absolute. If you don't see your specific setup, you don't trade. Period. All right, next section, mastering your trade mechanics. Now we're going to move from just analyzing the market to really mastering risk and protecting our capital. Now what's really cool about this slide is how clearly it shows the link between controlling your risk and your actual performance. Look at phase 1. With no risk control, drawdowns are catastrophic. But as soon as you start implementing those risk controls in phase 3, your drawdown stabilizes and your expectancy starts to improve. This just shows why these next few steps are so incredibly important. This brings us to the mechanical core of any trade plan. You have to know your exact entry price, you have to know the exact point where your idea is proven wrong, that's your stop loss, and you have to know that the potential reward is absolutely worth the risk you're about to take. So this ratio is absolutely crucial. For every $1 you risk, you should be aiming to make at least $2. This is what gives you a positive expectancy. It means you can literally be wrong more than half the time and still be a profitable trader. Without this edge, you're just fighting an uphill battle. All right, final section, controlling the unseen forces. Our last two checks deal with the forces both outside the chart and inside your own head that can completely wreck a perfect setup. First, are you about to place a trade 5 minutes before some major economic data release? That's not a trade, that's a gamble. Second, are you feeling angry or impatient or desperate to make back a loss? If you are, you need to step away. This final check is all about self-awareness. It's about admitting that your mental state is just as important as your technical analysis. Because at the end of the day, you can't control what the market's going to do next. You can't control news events, but you absolutely can control your process. You can control whether or not you follow your own rules, and that is your only job.
All right, let's bring this all together with one simple, unforgettable principle, the golden rule.
This is it. Print this out. Put it on a sticky note on your monitor. This is the single rule that will save you from countless emotional mistakes and protect your capital more than any indicator ever could.
If that checklist isn't complete, you simply do not take the trade.
And really, that's what it all boils down to. Amateurs are impulsive. They click buttons out of boredom or fear or greed. Professionals are patient. They wait for their specific conditions to line up. And if they don't, they are perfectly happy to sit on their hands and do nothing at all.
So, I'll leave you with this question. Do you use a non-negotiable checklist? And if you don't, what's one step you can take today to start building one? Let us know, and make sure you follow for day 6.